and that gave us a percentage. Now we'll multiply that by 100, and that is a loss of pretty much 37.99%. How's it going? It's Rocky. Welcome to week number 17 of what I like to call my 5 to 9 after the 9 to 5. So this is our summary for the entire week of week number 17, but I did include a couple of days from week number 16 just to show you the last 2 days where, what really got me into trouble. Trouble that could maybe force me to close shop here pretty soon, but hopefully that's not something that will happen, because I always find a way to recover or just start all over and build from there again. But essentially that problem occurred because I was trying to fight one of my demons, which is trying to catch a falling knife. But anyway, I just wanted to do a quick summary so I can show you what's going through my head. I am trying to methodically average down while avoiding margin calls. So it's not one of those where I'm in shock, things are falling apart, and I'm just watching it go down and down and down. It may look like that, but I do have a hard stop in my head where I know at that point, I can't take anymore and I will cut my losses. But at this point, I'm just basically trying to stay above water and wait for that recovery. Because I do have the ability to do that because it is a June contract. So I do have until mid-June to hold on to see what's going to happen. I'm not the type that worries about dips, because I'm a long-term investor first before I'm a daily trader. And because of that, that could be really one of my weaknesses as being a daily trader. But being a long-term investor, always watching index funds, I think I have a good sense of how the market is doing, but at the same time, no one really knows what's going to happen to the market next. But I just want to run through how many contracts I started with. So essentially, when I was trying to catch a falling knife on Thursday of week number 17, what happened there is we had a total of 20 contracts. And then on Friday, again, trying to average down with this one lone green hourly candle on Friday of last week, hoping for a recovery. I did average down again, and at that point we had 21 contracts. So that 21 contracts actually gave us an average of 35,059, and that's the alert that I have up here. That's the reason that I placed that alert, just as a reminder of where my initial average was. So of course Monday came along. I was trying to do snapshots of my daily on Twitter and of course on YouTube. I had $9,000 that I had to come up with. So I either had to deposit almost $9,000 or basically liquidate. And what I ended up doing is I had to liquidate 11 contracts just to meet the margin call. And at that point, we were left with 10 contracts. So 21 minus 11, we were left with 10 contracts. And I'm sure it happened to a lot of people that were probably liquidated somehow, because this has happened in the past and you can see that the market recovered a little bit. So it's always a sickening feeling when you are selling because of a margin call. But no, that's silly me. I just ran out of emergency fund that could help me fund the account. So moving on, you can see that the next day on Tuesday it dipped again and I added 2 more contracts. So at that point we were back to 12 contracts and didn't do anything on Wednesday. Thursday was actually pretty good. I mean, see the snapshot here, it did quite well with that recovery. I thought we were actually headed on the right direction, but unfortunately after hours, Amazon just had a really bad guidance for their earnings report for Q1. Apple did a good job, but somehow the Amazon, because NASDAQ is so heavy with Amazon and the other S&P 500, just to market cap, right? It's a big pie of the S&P 500, and really the entire market just followed that. And of course the news of Elon Musk selling almost $8 billion worth of Tesla and just his influence in the market I'm sure made a lot of people panic. But that's just, again, my interpretation of things. No one really knows what's happening. The market does what the market wants to do. But anyway, so we were at that 12 contracts. So this Friday, quite a dip again, almost. So at that point, the market was down at least 1,000 for the day. What I did is I did end up adding one more contract. So we were at 13. And then I did sell 3 what I'm doing is I'm offloading the initial contracts from the first 21. So at that point, we were really back down to 10 contracts. And what you can't see in the bottom here, there's a little green arrow there, is I added 2 more contracts. So we ended the day pretty much at 12 contracts. And we shall see how it recovers or not. But next week will be pretty critical for me. It's either all right, I'm done, or hopefully we get a bit more recovery and I can play the game of pretty much adding more and mitigating some of the higher ones from the top. So that's my strategy. That's just my train of thought. I just want to show you that this is my methodical way of doing it. I have survived these type of holes in the past. I don't recommend it if, depending on how averse you are to risk, and of course the math that's involved with it, right? Like, you need to be able to visualize and be comfortable what you're doing for it to work out, because you could get in real bad trouble with futures, because you can lose more than what you have used as an investment. So that's why it's very important to understand how equities work, how mutual funds work, bonds, how to do options before you even consider doing futures, because it is quite a volatile instrument to trade. Now, our account statement for April 29th, doing this around 6:33 in the evening, and this one pretty much starts from Sunday the 24th to today the 29th. Something I wanted to point out, lots of negatives you'll be seeing here. I did deposit $1,500 to the account, so I'll make sure I will pretty much add that to our starting cash. And you can see lots of negatives here, but we did have some positives. We had a mark-to-market positive of 1,185 and another mark-to-market positive 3,612, but of course pretty much overpowered by the other losses, like today, a mark-to-market loss of $4,519. And you can see this little negatives here are pretty much, the losses I had from those contracts that I ended up pretty much selling and then buying at a lower price. So I'll bring the calculator here, and our ending cash was $10,620.82. Let's subtract our starting cash on the top here. I'll do a parentheses because we did deposit money. Our starting cash was $15,627.25, and we did deposit $1,500 to the account. And for the week, it was a total of $6,506.43. And I'm just gonna subtract that by 40, pretty much losing about $162 per hour if it were a 9 to 5 40-hour work week or a business. And the percentage on that pretty much is, let's do $6,506.43, which is the loss, divided by what our starting cash was, which is $15,627.25 plus the $1,500. And that gave us a percentage. Now we'll multiply that by 100, and that is a loss of pretty much 37.99%. Anyway, that's our content for the week. I just pretty much wanted to give you an update of what my train of thought is. It's not a popular way of doing things. I'm sure a lot of you will disagree what I'm doing, but I do have this hard stop in my head where I'll cut my losses. But as of right now, I'm just trying to methodically average down, and hopefully a bit of an insight of what's going through my head. And good luck to you out there if you're trading. Definitely quite volatile weeks that are seem to happen. Anyway, hope you like the content that I showed this week. If not, give me another chance. Hopefully I'll still have more content next week if we survive the following week. All right, have a good one.